Welcome in a very special guest now. Mr. Prasant is now joining us. Mr. Prasant Sharma is with us. He, of course, looks at Star Union Dai-ichi, and he's the CIO over there. So Prasant Sharma is with us, Chief Investment Officer at Star Union Dai-ichi Life Insurance. Prasant, thank you so much for taking out time for us. It's the first interaction that we are having, and markets are at an all-time high. What do you make of it? Markets are just refusing to fall. What do you think markets are pricing in?
Hi, thanks for having me on the show. The markets have gone up materially over the last 15 months or so, despite once-in-a-lifetime pandemic, which has not only disrupted economies, but also, in some sense, the psyche of people at large. Economic activity has taken a big hit, but most asset classes have delivered reasonable returns over the last 15 months or so. And as a result of central banks and governments providing support through monetary and fiscal stimuli. While we expect economic growth to pick up now with economies opening up in general, and that would typically be positive for the markets. But having said that, there are concerns building up too. We've seen commodity prices across the board going up, not only in India, but in the rest of the world as well, right from agri-products to precious metals to crude to base metals, everything has gone up as a combination of demand surge and supply disruptions in pockets. Inflation as a result is beginning to inch up. In fact, it's already high in most markets. And there are expectations of bond yields also going up. While developed market yields are still low, but we've seen signs of yields inching up in India in the last week or 10 days. While RBI so far has done a great job in managing the debt markets and keeping a rein on the yields. But our sense is that markets are now pricing in higher growth and higher inflation, along with, and as the markets know that the supply of paper is huge, the markets are kind of now started pricing in higher yields because there has been a huge fiscal stimuli. Inflation is expected to come back and remain high for a reasonably long period of time. So in that environment, we expect bond yields to go up over the next 6 to 9 months. They've already gone up in the last 10 odd days. Our sense is that they can go up another 30, 40 basis points over the next 6 to 9 months. All this coupled with the fact that markets, as you rightly said, markets are at all-time highs. And with several headwinds now coming up, we have turned cautious for the near term from our perspective. Even US dollar, for that matter, having remained subdued for the last few months, has started inching up, which is also pointing towards some sort of risk concerns building up. And that's another piece in the overall jigsaw puzzle, which points towards a direction of markets remaining a little vulnerable. We think a large move in the markets is already done. Easy money has already been made. And now going forward, markets would start becoming more discerning and more stock specific. So our view for the near term, when I say near term, we mean about 3 to 4 months, is a bit cautious.
Yeah. All right. Okay, Prashant, that's really been the playbook, right? In the global markets as well, we had seen that just before the US actually came out of the pandemic, the markets already hit record highs. And then from there, it sort of started, flattening out. Prashant, I want to ask you about some of the sectors that have run up quite a bit and some that have stayed subdued. Do you think that there will be a course reversal over there as well? For example, where metals and ITs now will remain flattish and the underperforming guys, infra, for example, which everyone has been saying that, is a big beneficiary of the government spending, but we haven't seen really any share price movement. Infra being one of them, and any of the other underperforming sectors. Do you see that rotation happen from here on?
Yeah, you bang on. That's pretty much what our view is. While the two sectors that you talked about, metals and IT, yes, we are cautious in the near term, given that the stock prices in both these sectors have gone up materially. And infrastructure is one sector which has remained subdued, but I think its time is coming. As you rightly said, there is government push to restart the capex cycle, which was subdued for the last few years. We see clear signs of the capex cycle in India beginning. And hence, this is one sector which can be a beneficiary of all the growth push, not only from the government side, but we are also seeing signs of private sector capex picking up. So yes, this is a sector which having remained kind of sideways largely should pick up going forward and probably deliver superlative returns over the next 6 to 9 months. There are sectors which are, as you rightly said, have gone up materially. So by and large, we would be a bit cautious in the sectors that have run up for the near term. But metals and IT, we do think that once a little bit of a correction has taken place, and especially for metals, we expect the commodity prices to remain elevated. Of course, there will be volatility. This is one sector which kind of moves a lot with global developments. There will be volatility, but this is one sector which in the long term also should probably do well. Of course, there will be price gyrations from time to time. IT, on the other hand, we think obviously the stock price movements have been great.
Just a word, Prashant, just a word as far as the defensive space is concerned. Would you want to go into some large MNC companies, very large IT companies which generally don't tend to move? Would that be something that you would be exploring?
Yes, I would typically call them hiding places for the near term. So some of these companies that you talked about, some of the large MNCs, FMCG, some of the IT companies could be hiding places for the near term because, as I said, we do expect a market correction over the next 3-4 months. But the large returns would probably be made in some of the other sectors, which are more cyclical in nature. So yes, for the near term, you may park your money in some of those sectors which could probably hold on. But the large money, as I said, would probably be in some of the metals, large banks, which are doing well. Some of the large private sector banks, which have a combination of both, which focus both on corporate and retail side, and have done well, raised money at the right time. They're well capitalized. They're growing well relative to the overall system growth. And still trading at about price to book of about 2 times. So we are extremely bullish on some of those banks. Infrastructure is one sector which we talked about. Oil and gas, some of the names, some of the largest companies in the country. I don't want to be stock specific, but companies that have now moved largely from traditional business such as oil and gas and petrochemicals and more towards the new age consumer facing businesses. Yes, we are extremely bullish on some of those names.